Well, good morning, everyone. Welcome to our Friday trading room. Sorry, I'm losing track of the days here. Friday, woohoo! All right. Let me just get the screen share going on. Okay, screen share is working. Yesterday, I was just reviewing the markets here before the open. For an FOMC day, it turned out to be a bit of a nothing burger. The market falling off somewhat through the overnight. Yesterday's session really more or less stuck within a very, very broad sideways trading range. Not that there weren't opportunities to be had, but I'm just looking here at the way the day is starting. We do have a bit of a gap here. We'll take a look at the daily. It's a little bit more instructive. Hold on a second. Daily chart, where did I put you? So here now the daily yesterday, and you can see a relatively quiet. The market closing here, opening down here, so we do have a gap above us. And I think what's significant, if you're following a daily chart, if you throw a trend line along here, I think this is trend line here is going to be a big deal. If the market breaks down below here, looks like somewhere around here, it may find some sort of support. So that's what, around 70, 42, 70, 40, 70, 50. That may be as low as it gets. But we'll see. Definitely some bullishness going on, but you'll also notice here what's going on. While this rally is going on, this is what's happening to your volume. And that's not right. You shouldn't see volume declining as the market is trying to rally. It's showing a lack of participation, which may stifle the rally. All right, here we go. Right now we have a bit of a sideways mess. So we'll just have to wait. Kind of flip-flopping here a little bit. It's still very, very early, of course. We're only about 4 or 5 minutes into the day. So we got this great big sideways trading range. I don't know how to classify it just yet. Certainly the bottom end down here near 70.96, maybe even as low as back here, which would put it somewhere around 70.94 zone. You can see they made a little bit of a poke down here. Now the reaction. I don't know if I want to try a with trend signal there. With trend being on the short side. If it wasn't so early. All right, they keep coming back to it. I won't do it on the Eagle because it's going to cost me too much, but I can probably frame a trade a little bit tighter here on the Raptor. And essentially what we're doing here is we're looking for here was the breakout, here's the retest now. I know it's all kind of, it's not as nice and defined as it was yesterday. You could throw a buy order above here. You could put a sell order below here. Like I said, it's still very, very early in the day. Oh, there we go. We got a little bit of a break. The market's looking for direction. So if you wanted, you might try to run this out. Actually, let's see. Trade forecaster saying we are in scalp mode. So maybe I should just take the profit if I can get it. There we go. We got the break even. Come on. You can do it. You can do it. Oh, there's some, they're thinking about this. Okay, I'm going to stretch this. I said I wasn't, stinkers. Stinkers. They came up short of my profit objective anyways. But now it looks like they may try to head lower. So depending on how you framed your trading range, here was the breakout, here was the retest, and here now the follow through to the short side. And unfortunately for me, on that retest, that second time through, they did look back just a little bit too soon. I needed them to give me one more bar, or I could have held my stop. Oh, and they did get down to that secondary support zone, which was my intended profit target. Antonio is asking, good morning, Eric. Well, good morning, Antonio. Did you have a chance to check on the Raptors ATR? Yes, I've put it to the programmers. It's going to take a little while to get it done, though. Let me just check and see if they have replied. Okay. Yeah, Ben got back to me, and it looks like he's on it. say I got looking at my emails and I'm not looking at the market. But fortunately, we started hitting a little bit of a sideways drift here. Or unfortunately, the trend does seem to be down right now. They don't seem to be paying all that much attention to the that upside gap at the moment. Oh, a nice little late filter entry signal here while we were waiting. This here on the Falcon. So the trend line not changing color, but the filter going out of sync and coming back into sync. Yeah, you could be right, Stephen. Stephen says with the positive U.S. elections for the market, I think we'll fill that gap today. That trend line I drew earlier makes me think that maybe, just maybe, we're going to see a little push down to the 70-50 zone. I'm going to get this trade in here quick. This is just your, wrong button. This is just your basic trend line touch signal. Just an excuse to try to get with trend. And now they're actually getting a little bit more bullish. My filter is out of sync here, so I'm going to close this trade because it's no longer bearish. In fact, we have a little bit of a number 2 signal building. We have the background highlight here. It didn't trip just yet. There is a number 2 signal. So if you were inclined, all right, here it's a little bit heavy, but let's see if we get some follow through here now to the long side. Target for these counter trend moves is the hard edge of the trading band. It might have been a little bit more desirable to get in a little bit earlier here. Okay, I'm going to pull my stops now here below that little swing. Maybe not make it quite that tight. And I'm going to bring my break even up a little bit. So if we get another bullish push here, hopefully. Come on, you guys and girls, get up there. All right, got the break even. Come on, give me that little push. Oh, you guys, look at how they're holding at that 70-80 zone. Okay, they're within a tick now of my profit objective. Ah, man. I was hoping for an early trend change to develop here. Oh well. A little bit choppy today. That's your scalp mode. So close on a couple of trades. Yeah, Stephen, I hear you. Stephen says, I was long and I moved my stop to break even. It came down, stopped me out, and now it's going back up. I know. It's not fair. Look at them go. Yeah, sometimes you're better off just leaving your stop. You pays your nickels, you takes your chances, and that's that. If it works, it works. If it doesn't, well, try again. Hey, way to go, Ray. Ray's doing better than the rest of us here. Ray said I chickened out. I took 69 bucks. I made my broker happy. All right, well, we're kind of in a bind. You can see here on the Raptor in particular, the trading band starting to twist up. If we look here on the left side of the chart, things getting rather constipated. I don't know if it's too early to call this a trading range in the Eagle. Maybe. If it is a trading range, we should see selling up here somewhere, buying down here somewhere, and then the middle, of course, well, that's up for grabs. The Hawk also introducing a lot of yellow bars, although there has been some decent follow through on the Hawk signals. Here's a first micro macro cross to sell. Here's a little bit of a sloppy 4 arrow consolidation. So here's the first micro macro cross. This is a little bit of a sloppy 4-arrow consolidation. You would include your first micro macro cross there. 1, 2, 3, 4 signals, down she goes. Here's a macro pullback signal that has some follow through. Here's a green bar sell that failed. Macro pullback slash first micro macro cross. Another very, very sloppy 4-arrow consolidation. But certainly some opportunities in the hawk here this morning. You'd have to be paying attention though. You got to be alert. Speaking of first micro macro crossovers, here's another one in the whatchamacallit, in the hawk. Things pretty quiet here right now. Don't know if we're waiting on a report. Let me check the reports calendar. Nope. Not that I can see. While I think of it, a reminder, no trading room on Monday. I will be back at it on Tuesday, so I apologize for the inconvenience, but I'm not going to be able to make it in time for Monday's trading room. All right, well, here we go, kind of toward the bottom end of the trading range. So we'll see as they get down here now, closer toward the lows. If we get some buying, that's going to be a test of the extreme. You can see we already have a rule of 3 signal here in the Eagle. There has been some buying pressure. In fact, if it turns here, I don't know if I want to get in too early. I was going to say I may even try to buy it up. Okay, well, here we go. They're going to call my bluff. Here's a rule of 3 signal now, giving me my rule of 4 signal. All right, let's see what you got. The rule of 3 signal on the Eagle is a counter trend signal. And Because this is the Eagle and the bars are worth a whole lot more, I'm going to get a little bit more aggressive here with my stops. In fact, I'll take the trade to break even. There we go. Oh, no, got tagged again. All right, well, I'll hold out. If this rule of three holds, we're going to get a with trend signal as well. So I'll hold out for that. That's the thing with the counter trend signals across the board, whether it's the Eagle, the Hawk, the Raptor, you can always use your counter trend signal simply as an early warning that perhaps the trend may be ending and you're going to get an opportunity the other way. It's really, really rare to get shut out entirely on the signals. I'm being a little bit more aggressive with my stops here just because the sideways nature of the market, because we may be stuck in this broader trading range. And hey, we are in scalp mode, so why ask for trouble? Okay, the Hawk already bullish here, working another 4-arrow consolidation slash macro pullback slash first micro macro cross. The Falcon also trying to do a trend change signal. Paul is asking, hey Eric, would you wait for a break above 70.90? That's the smart play. That's the smart play. If you can stand it, waiting for a break either below this low or above this high, I think is the prudent thing to do. And as we've been doing for most of this week when the market goes sideways, in fact, let me pull something here to demonstrate. So this morning we were starting with a range that looks something like this. Once the breakout occurs, then that puts you in the driver's seat, because the breakout will either continue after the retest, after the retest. The breakout will either continue or it will fail and go the other direction. So once the breakout occurs and you can see the market trying to retest, well, you can take the initiative and you can already throw an order. This could be your just in case order below the breakout point. Because if the breakout does stick, if the retest does continue, well, guess what? You're going to get some follow through. Then when the retest does attempt to head lower, you can actually throw in a buy order. So you can actually get your market in a bit of a pinch. That's what we're kind of waiting on here. Oh, there we go. Okay, so we got the break above 70.90. So we can actually throw, let's do a little OCO type action here. So we can actually throw our buy order above there, because now we're witnessing the retest, aren't we? Oh, and what a shame. That rule of three signal worked out so nicely there. I would not have been able to ride out this pullback, though. Actually turned out to be a rule of 4. Okay, concentrate, Eric. Okay, so now we've got the buy. Now I can throw my short order in below here. So you see what's happening? The market came up, it's retesting. This sell stop, this sell signal is a little bit more aggressive, but what we're planning here is, okay, the market has broken out. Can it continue higher? If it can't, it's very likely going to continue lower, and get back inside this trading range somewhere. In fact, it may even get down to the bottom end of the trading range and maybe even break the bottom end of the range. Okay, let's get a stop. No, that's not what I want. What? Okay, let's try that. There we go. All right. I've already taken my trade here to break even. And we'll see now that the market may recover somewhere here in this top third. And there is profit here. We've got some decent open profit. As the market gets back here toward this bottom end, we can become even more aggressive with our stops because this is where the buyers are, or where we anticipate the buyers to be. You can see they're trying to buy it up a little bit. All right, I took the early stop out, but there is every reason to believe that because this breakout up here did not hold, the market's going to try to test this bottom end. But yeah, the breakouts can be a great strategy if you wait for them. The temptation is to take the early breakout because sometimes you'll get a big move and the market will run away and it won't give you a retest for an hour, and in the meantime you're kicking yourself saying, oh, why didn't I take the breakout? Because most breakouts fail. About 75% of all breakouts will fail. Doesn't matter if it's a breakout from a trading range or a trend line break, most breakouts fail. But now that you know what to look for, you can take advantage of those breakouts when they don't work out or when they do work out. Kind of puts you in the driver's seat. All right, hooray, finally got a trade with a little bit of follow through. A little bit of money on that trade. So if I were running my trade quota, my day would be done. And I could be starting my weekend. Now you can do the same thing here to the short side, of course. The problem sometimes with trading ranges is which range do you draw? Do you draw your range like this? Or do we draw our range like this? Which one is the correct range? Well, I suppose they both are. If you want to be more aggressive, you could look for breakouts on the smaller range. If you want to be more conservative, you can wait for breakouts on the bigger range. But like I said, now that you know what you're looking for, it should make it a little bit easier, even if the breakout occurs somewhere in between here, which it probably will. And when in doubt, wait. A missed trade is still better than a losing trade in my book. Here's a little tip from Steven. He says, since the high volatility from about a month ago, if you get 2 or 3 1-minute candles in either direction, you can take the breakout, and it's usually good for a profit. That's pretty aggressive, Stephen. But I guess you're right. If the market's, we're talking mini trends now. All right, well, here's a possible late filter entry signal building on your Falcon. Oop. Okay, we can nix that. Okay, and here we go now with the bearish break. So here's the larger range. This is the part that drives people wild when you get the big move and no look back. I suppose we could have favored the shorts given that the bullish break did not stick. I don't know if I want to commit to it just yet. That's not even one bull bar, but I don't know. That may be the only chance I get here if this breakout's going to be quick. Come on, give me at least one bull bar. There we go. Oh, yeah, are we? Mark says get ready for the bounce. Oh yeah, I guess the band is getting up there a bit. We're a community of traders. Certainly, between everybody's input, we got to be right every once in a while. Oh, all right. Well, there we go. There goes my OCO. Let's see. Okay, let's get a stop going here, and I better bring that bad boy down. Actually, I suppose the better stop placement is right here. If it's going to retest this breakout, that's where it may try to get. If I can get one more bearish bar showing up. There we go. Oh. All right. We'll bring it in, and if I can get one more bearish bar, I will take this trade to break even. All right, break even it is. All right, let's squeeze this trade. We're getting down around that 70-50 zone that we looked at on the daily chart. Anywhere here, I think from around 70-50 to 70-40, we might see a bullish recovery. And again, I'm just pulling that off of the daily chart. That's kind of where the breakout, the original breakout higher occurred from a few days ago. It's not like all the buyers have all of a sudden packed up and gone away. In fact, I could even put in a profit target around the 70-50 area. Why would I do that? That would make sense. All right, I'm ultra aggressive now with my bar high-low strategy. I'm gonna go bar for bar. Yeah, Mark says, I like your outlook. Well, they're thinking about it. You can see there's some buying going on here. The sellers that keep pushing them down. If we get below 70-50, I think we'll chase a few of the buyers out. They may scramble and try to get back in at around 70-40. There we go. We saw 49 tick. Come on. There's 49. Come on. There we go. Let's unwind it now. Let's go. Nope, not quite. But that's okay. I wasn't disappointed with that trade. Like I said, I was expecting a lot of support coming in here around that 70-40, 70-50 zone. So I'm just as happy to be out of that with some profit. Hooray. Okay, actually, not a bad day. Tom asking, Eric, how do I adjust the number of ticks? Okay, which number of ticks are you referring to, Tom? Are you referring to your bar size? That's about the only one I can think of. Yes, bar size. Okay. Bar size is very easy to do. You need to go to your data series. You can either hit that icon up here, or you can right click on your chart and you go to data series. And this is where you can adjust your brick size. You can also choose your session template. I like the default 24/5. If for no other reason than the program has told me to use default 24/5. They said it works best for the trading algorithms. This is also, of course, where you would choose your bar style. Oh, might be getting that bounce now. A little bit of a late filter entry back to back with the trend change signal here on the Falcon. I don't know. The trend does seem to be favoring the shorts today. For the time being, anyway. We're getting a number 3 signal here on the Raptor, and it may actually follow through, but I've thrown this squiggly ATR line on here the other day, which is also borrowed from the Eagle. And currently we are against that. So we'll see how that serves to maybe keep us on the right side of this trade, maybe. One thing, excuse me, about this number 3 signal, even if you chose to take it, there's good reason to take the number 3 signal, even though it's against the ATR. 2 reasons. First off, we have a decent trend. The number 3 signal, of course, is a continuation signal. Had a nice little bear flag breakout. But on top of the trend, we also have enough room to do something with this trade before it tests the extreme. So if we took this trade and our initial stops are up here, at this point, if I'm fearing a test of the extreme, if I'm thinking the market's gone as low as it's going to go, it's going to start to head higher, I can bring my stops up a little bit, or even I had an opportunity to take them to break even and take a break even stop out. Or I could have settled for a scalp profit as well. There was certainly a scalper's profit in that trade. That's probably the best alternative. Just tighten your profit objective. Well, so far we kind of got a bit of a sideways drift again. Well, are they going to get a little bit more bullish here? We're back into the hard edge. And this, I don't know, to me it almost has more of a bear flag look to it, although not a very strong looking bear flag. I mentioned to you before how Mike Filigera, he likes to use this ATR line when he's trading the Eagle, and he'll actually get very, very aggressive with it. In fact, he'll look to buy so long as it's in sync with the ATR band. Whether or not it's in sync with the Eagle band, to him doesn't matter as much. Now, Mike, very often he manages his trades very, very aggressively. But these are the kinds of moves he's looking for. Okay. A little bit more bullish, like I said, somebody like Mike Filigari, he'd already be on top of this buy. I'll demo it here just so you can see. It's not really a rule of three. In fact, I'm just showing you because there's nothing else going on. It's not really a trade I would recommend. If you're looking for a trade to follow on, I'm just kind of goofing around right now. But I'll see if I can't manage it like Mike does. And maybe sneak a couple dollars out of it. And we're not getting much of that either. All right, well, let's close that up. We'll put it away. Just kind of hit the skids here all of a sudden. Yeah. I hear you. Steven says, I'm exhausted. 5 trades today and profitable, but not by much. It's a grind today, no doubt. I think we're starting to kind of back ourselves into a bit of a corner again, or at least the market might be backing itself into a corner. Whenever the trading range, your clouds, start to get this type of shape to them, where they get narrow and just kind of going sideways, this is a little bit of a danger zone. We'll very often get a breakout from here, but it's not clear at this point whether the breakout's going to be higher or lower. The market is very, very balanced, and it does make for some difficult trading. But it's okay to wait. You don't have to rush. right, so if that is a great big bear flag forming, we'll see how it reacts now to the trend line. It really is a 50-50 split at this point. I don't know if I want to do another OCO. I was going to say I could do an OCO above here. I could short below here. Better, I suppose, to wait for the breakout and see whether the breakout sticks. So if this was my range, here now my breakout, let's see if the market retreats. Come on, give me one bar. All right, so I can throw my buy in above here now. And I can park my short below here and adjust it as necessary. By the way, this could be interpreted as an early number one signal. Cloud's not fully crossed, but like 80% there. And we're getting the warning dots for a buy. So we're going to get a discretionary buy signal, but that could be interpreted as an early number one, which is your cloud crossover. So if I establish my trading range correctly, here's the bullish break. Here now is the retest. And now, oh, oops, I hit the wrong button. Okay, let's try to get back in on that. I deleted my entry order and closed out my trade. What I was going to do is I was going to show you that I could roll up my order now here to below that little swing, as we got that little bit of a sideways thing going on again. And I will probably be a little bit more aggressive here with my break evens again, just because the way the market is today. It's Friday, so things tend to be a little bit wonky on a Friday. That is a technical trading term, by the way. Oh, don't stall. Come on, you're doing so well. let's put the squeeze on and let's see if we get any giddy up. Next resistance line, not too far away here at 70, 78.5. Okay, there we are, kissing it. You can do it. Come on, get up there. Ooh, they're right there, right at that support zone. Okay, well, that was all right. The proper #1 signal developing shortly after our breakout, and very nice follow through. That's why it's a high probability signal. When the conditions are right, you can anticipate that the signal will at least get to its profit objective. Frank's asking, do we get a rule of 3 signal on the Eagle? It's not a very pretty rule of 3 signal, and here's why. Yes, we got 3 counter trend signals. 1, 2, 3. But the Eagle, the rule of 3 signal in the Eagle is a counter trend signal. So we do have a trend. That's component #1. Component #2 is the test of the extreme. And that's the kind of the part that I'm having trouble with here. We did get it. It came early. But by the time this rule of 3 signal was printing, I would have, especially after the first signal, I would have liked to have seen the market dip at least a little bit, even if it didn't get as low as it did previously. Just a little bit of a dip, just to show the sellers. Somebody gave the sellers a kick in the pants after that buy signal, because that's really what the rule of 3 signal is showing. Is it showing that, okay, we've got a downtrend. Now all of a sudden, in a downtrend, we've got a buy signal. And that usually startles the sellers, in this case the sellers, into trying to recover the trend. And then if they can't recover the trend, then that opens up the possibility of a reversal and a move higher. Let's see if I can find you something a little bit more textbook. Here, this one. Even though this one did not work out, it is a better rule of 3. So go figure. The one I'm going to show you didn't work out, and yet it should have. And the one that we were looking at did work out, but shouldn't have. Okay, this just to clarify the point. So we're in a downtrend. The market comes up. We produce a buy signal. We produce another buy signal. At this point, you should be thinking, okay, rule of 3, possible reversal. The market comes back, tries to recover the trend, comes back yet with a third buy signal. Here now you have your complete rule of 3 with your test of the extreme, the whole shooting match, but it didn't go very far. Sometimes with these rule of 3 signals, especially if it develops like this, again, it becomes a management thing. If you think you can take the trade and manage it to the point where you can do something with your stops before you encounter this swing high, then go ahead, go for it. You've seen with the Eagle, I tend to be relatively aggressive with my stops. Again, the bigger bars, bigger tick values. Otherwise, if it forms this far away, sometimes I'll use it as an early warning and I'll wait for that trend change signal to develop. In which case, if it's this close to the swing high, I'll very often take it above the swing high, just in case. And that was one of those just in case moments. But yeah, not a bad call, Frank. It's just that I didn't see that test of the extreme. Like I said, it did work out. Yeah, perfect. Frank says I was following the ATR here on the Eagle, so I did not take the sell signals. And that's exactly what it's for, and that's why I have it on there. As I've mentioned before, Mike Filigera, he gets the credit for this one. He said, "Hey, Eric, have you thrown the Eagle or the ATR on your Eagle because it really serves as a decent filter?" What you can do in signals like this, or even signals like this, is you can wait for that filter to turn. So here's your signal, and you're looking at it and you're thinking, I'll wait to see if the filter turns. This bar now, that flipped the filter over, becomes your signal bar. So just a little extra step. You're giving the market a little bit more room, admittedly, but sometimes it's not about taking every single nickel out of the market. Rather, you want to make sure you stay on the right side of the market. Steven swinging for the fences. He says, I'm looking for a retrace back to 7,100. I can see that. I don't think that's unreasonable. If this little bullishness holds, I think we could even try to fill the gap. Now, we're going to see probably a relatively large retest here. And then the market will probably make a bit of a sideways trading range. And then we'll get a breakout. And then we're going to get the opportunity to get long. You heard it here first. I used to drive Adam crazy with that. He says, I hate it when you guys talk about, what the market's going to do next, and then it does it. He says, how did you know? Well, you sit in this chair for 20 years and you'll have a pretty good idea what the market's going to do next as well. Now watch it tank. Now that I've said all that, just watch the bottom fall out. We all have our best guesses, but at the end of the day, you got to trade what's in front of you. I've mentioned this before, but it bears repeating. Some of my worst trading days have been ones where I come into the market with a bias, where I think the market has to do this or it has to do that. It's got to go higher. It's got to fill that gap, or it has to go lower. It's got to retest the lows. No, it doesn't. The market will do what the market will do. Very often it's a mystery. As one friend put it, the market will do whatever it needs to do to relieve the most people of their money, the highest number of people from their money. And here we go. So now we're seeing a little bit of that little bit of a move lower. And from here, if in fact the bulls are going to recover, they should do it, well, certainly no lower than 70.50. I'm thinking even 70.60. Well, why do I say that? Well, I'm just kind of eyeballing where about halfways of this recent move was. I don't do much with fib levels, but that doesn't mean that the market doesn't do 50% retracements. And I think the other thing, the market may be fighting the clock here as we creep up on the Friday lunch hour. All right, here we go. Kind of bottoming out around 70.60, maybe. Still too early. The Eagle, the only one that's even remotely bullish. The Hawk, the Falcon, the Raptor already into sell mode. I'm not sure I'm going to press my luck anymore here today. Had a couple decent trades, had a couple break evens. It's kind of nice going into the weekend without sucking up a loser. All right, well, I have everyone, again, a reminder, no trading room on Monday. Do your best to plug along without me. Oh dear. Talk like that, always, what do they say, pride before a fall? Watch me blow up on Tuesday. All right, well, here the with trend signal now. It is a number one signal. So if you believe the overall trend is down, which you can make a very strong case for today, there is your short. The problem I'm having with this trade really is stop placement. This is two swings back, way back there, which, you know, for a starting point is okay. You could probably even get by running a stop somewhere around here. And given the, what condition are we in? Oh yeah, we're still in full on scalp mode. Big surprise there. You could choose to be a little bit more aggressive with your stops here. on the next, especially if we get a bearish bar. I probably would not hesitate to bring my stops in above that swing high and maybe even to break even. Especially if I got one bear bar here. Come on, come get me. Oh, come on, you can do it. All right, so this now, I would bring my stops at least here to the 70-61 area because the market is re-attempting to move lower. And if the sellers can't pull it off at this point, then I may as well take the small stop out. There we go. Break even for me now. And hooray, actually hit the profit target. So that number one signal, actually, I guess I should have taken it. Paul, the other Paul, is asking, is there a place where we can share charts? The Facebook forum is a great place that you can share charts. I'm sorry, I don't frequent it as much as I should. If you want to share charts in the room, if you're able to post them and you can send me the link, I can put them up, or you can always email them to me. So the eagle now also pulled over, and now we're starting to get some of that support. I could be inclined to be a little bit more bullish at this point, going back to my earlier plan, looking for a possible retest now of the highs. Interesting question here from Frank. Frank's asking, okay, if we're going to go here to our indicator window, just so everybody can follow us. And we're going to look at one of the settings here in the Raptor. Now, Frank's asking, I had the trend confirmation turned on, and it filtered out these last few signals. Would you recommend using this filter? Okay, so the trend confirmation used for hard edge signals, that's your number 3 signal. Trend confirmation means both clouds must be in the same direction to permit a number 3 signal. Now, most of the time, they're going to be in the same direction anyhow. But occasionally, the cloud will have a little bit of a twist in it. It'll get a little bit out of sync here, like right here. Oh, I guess in this case it printed, never mind. So both clouds have to be fully engaged in the same direction for the signal to print. Mine is set at the default off. I haven't really noticed a need to change it, but to be perfectly honest with you, I haven't ever really tried it the other way. I suppose it depends on the market you're trading. You can experiment with it a little bit. Here is a very, very early number 2 signal, which I'm going to demonstrate, and then I'll explain it. So I don't know, Frank, to answer your question, like I said, I haven't really tried it the other way. And you can get stuck using too many filters as well. This being a number 2 signal is naturally going to be against the ATR. It just works that way. I warn people about trying to over tweak your system. It becomes an end in and of itself, where your objective is no longer to make money, but to filter out all the poor signals. It very often seems like one and the same thing, but it's not. You know, trading has as much to do with trend recognition and confidence in your signals as it does trying to filter out the stinkers. I hope that makes sense, because it's like I said, it's a rabbit hole that some people never really emerge from. So you need to be careful. But play with it. That's what I would suggest. Play with it. It's easy enough to scroll back through your chart, compare signals, but it's not a filter that I have employed. Sorry, that probably doesn't help you very much. And I did get on board that early number 2 signal. Now, the early number 2 signal, it did not print as a number 2, but look at what happened here. We have the downtrend, we have the pullback, and now we have the essentially a retest of the extreme. And I know that there's other lows around here from looking at my Eagle chart. Then we come back with the buy signal. So that it was a bit of a chance, right? I'm looking for a reverse, an early reverse off of this whole 70-50 zone that I know sparked some buying before. And fortunately, had some decent follow through on that. And that's going to be a nice way to end the session for this week. And again, no trading room Monday. I will see you guys Tuesday. And girls, have a great weekend. I'll talk to you soon. Bye for now.